Good morning and welcome to our first Knowledge Bank of 2023. This morning's webinar is going to be hosted by Mark Briggs, Managing Director of Barrett Corp Harrington. Mark is going to be discussing the importance of accurate reinstatement valuation for blocks of flats. If you have any questions throughout the webinar, please pop them in the Q&A box, which is at the bottom of your screen, and we will try to get through as many as possible at the end of the presentation. The webinar is being recorded today. You will have the opportunity to watch it back via our YouTube channel. That is all from me. I am now going to pass you over to Mark to begin this morning's session.
Great, thank you, Vicky, and thank you everybody for joining this morning on, as Vicky said there, the first Knowledge Bank of the year, so no pressure there. You'll see the focus of this session is to talk about reinstatement valuations for blocks of flats. So before we get into it, just a brief introduction of myself and BCH. So as Vicky said there, my name is Mark Briggs and I'm the Managing Director of Barrett Corp Harrington, or BCH for short. It's likely that some of you know BCH and have worked with us in some capacity over the last 16 years. And to you, I say welcome back to another one of our talks on this subject. But for those that haven't worked with us or don't know us, if I may, let's start with a summary of us as a business. So BCH started in 2006 by Martin Barrett, Roger Corp, now retired, and Lorna Harrington. 3 professional disciplines combined: loss adjusting, quantity surveying, and insurance underwriting. And it was these 3 core skill sets that made BCH unique in the niche profession of insurance valuations, now known to most as insurance reinstatement cost assessments, or RCAs for short. It's these core foundations that BCH was built from and remain central to the business. And although over the 16 years of trading, we've been offered loss adjusting work, risk assessment work over the years, to date, we've stuck to our core business of RCAs, doing one thing and doing it well. We maintain that we're specialists in the field of RICS compliant reinstatement cost assessments. And with our admin team, surveyors, and some consultants, we now employ 50 staff covering the UK and occasionally into Europe. We're an RICS regulated practice. Moreover, one of our founding directors, Martin Barrett, who many of you will have heard from in the past, was a member of the RICS steering group, which published the professional guidance note for RCAs in both 2011 and most recently in 2018. It's always been a focus and remains a focus of ours to raise awareness of the specialism of insurance reinstatement cost assessment and the scale of the problem, which despite our best efforts remains massive in the industry of incorrect insurance values across the markets, and particularly the flats market, as we're talking about today. Over the years, I'm proud to say that we've been able to innovate our services to ensure we're providing accuracy, quality, and serving the needs of our customers, ultimately building a reputation and a service that's trusted across the market, with our services accepted by all major insurers, brokers, and networks across the UK. But what specifically about BCH and the leasehold market? Well, since the business was formed in 2006, we've been undertaking RCAs on blocks of flats. But with the knowledge of the leasehold market, Martin Barrett launched BCH's flat rate service to simplify the instruction process, focusing on language used by managing agents. And since then, reinstatement cost assessments on blocks of flats has been the backbone of BCH's business. As I've already stated, we're an RICS regulated business, and we hold that to the highest degree of importance to ensure that our standards consistently meet the guidance note across all surveys we undertake, providing peace of mind to our customers that their survey gives them a properly insured block. Equally, we're a partner to the IRPM and an ARMA member, regularly contributing and attending seminars, conferences, and workshops. Over the years, we've developed a bespoke flats report focused on the insurance for blocks of flats and provide our findings in a simple and concise format developed alongside our customers. So that's a potted history of BCH covered. So let's move to the subject of today's knowledge bank, reinstatement cost assessment for blocks of flats. first slide, really, damage to property is a fact of life. Losses happen. You can see some images here from some recent news that just show 3 examples right here in the last couple of days. Over the last few years, fires, floods, and water damage might not have been made the headlines while we've all had other more pressing problems to deal with, but they've still cost businesses and individuals thousands of pounds to put right. These emergencies are still the most common causes of major losses, and they haven't gone away just because our thoughts have been elsewhere. Claims do happen. It's the very reason, of course, that we have insurance. And in recent weeks and months, there has been some relatively major incidents in the flats market that have made their way to the national press. Sadly, that's largely as a result of the losses of life, but the fact remains losses are happening all the time. And whilst not all of them are major or reach the national press, they can all have serious consequences to the residents of a block of flats. And in today's world, it isn't just major losses that are looked at. A colleague of mine who lives in a block of flats recently reported that her block suffered from 2 claims in 1 year, including a mains water pipe that burst and a dislodged roof tiles, the former flooding a basement and all the lift shafts in the building. Fortunately, in both incidences, no one was hurt, and fortunately, they had adequate insurance cover, resulting in minimum disruption or impact to the leaseholders. But statistics show, some of which I'll show you in a minute, that this isn't the case in the majority of the time. Were they not appropriately insured, the financial implication of the shortfall in cover likely would have outweighed the impact of any premium increase. Now, I'm probably stating the obvious with this slide and reminding you of something that you all know to be the case, but I wanted to refresh on this point before what's been happening in the last few years. So, what of the last few years? Well, I've condensed probably what could be 5 or 6 different slides here into 2. I'm acutely aware that for the last few years, we've all spent a lot of time looking at screens, studying graphs and seeing statistics on a page. So I'm going to try and keep this condensed as best as I can with the images you see here. Throughout 2021 and 2022, I've heard, and we've probably all heard, of the insurance market being referred to as the perfect storm. But there's also been plenty in the media about the rising cost of construction. You'll have seen the articles 40-year highs, and we've published some articles ourselves. And anyone who reads the press or is involved or related to construction or the built environment, or has simply tried to purchase some materials for the day-to-day DIY projects that you might have undertaken, will know that throughout 2020 and 2021 and 2022, the cost of construction has risen significantly. And although there's a lot of evidence to say that that inflation will slow down, there's not a huge amount pointing towards particular deflation of costs in the near future. But what does the increasing cost of construction have to do with insurance and blocks of flats? Where has it come from, and why should it be considered in relation to an insurance policy? Well, the root causes, and I say causes plural, of the rising cost of construction have been well documented now. And as I said there, it'd be overkill for me to cover them in great detail here. But it's important to note that they have reached record levels, and this has clashed with the insurance market over the last couple of years. At this same time, insurers are having a tough time as well. I think I can probably hear you all saying, so what? None of us have had it easy in the last couple of years, not to mention what might be on the horizon in 2023. But what happens in the insurance industry impacts everyone with an insurance policy. The squeeze on liquidity has led to a hard market and means rate increases, as well as more scrutiny of the suitability of risks for underwriting. This clearly has had a knock-on effect on policies. Insurance is getting expensive. I dare say everything is getting expensive. Claims cost more, capacity is reduced, and insurers are having to charge higher premiums to recoup losses in their businesses to make profits and reflect capacity in reinsurance market. Insurers are paying less commission. They're getting choosy, which is something we're seeing affect the flats market. So it's a supply and demand situation in insurance, as well as it is in construction as well. And it would be reasonable to say then that 2021 and 2022 was the alignment of two major industry events, with building declared values being an area significantly affected by both issues, increasing the risk to policyholders. But here's the most important reason why anyone insuring a property should sit up and take notice, really. Insurers are taking a tougher stance on claims, including checking the adequacy of sums insured at the time of loss, something that I'll cover later on. So, whilst it's always been important, and we'd always say it's important, perhaps now more than ever, it's important for anyone responsible for securing buildings insurance to make sure their policies are regularly reviewed to ensure cover is adequate and meets the requirements of the policy. Unfortunately, not many of us are in a position to fund any shortfalls in insurance payouts that could result from underinsurance. And what do the leaseholders who pay service charges and their perception of what's going on? Well, I dare say that for many people, insurance is one of those annual purchases that they begrudgingly make. It shouldn't be, but it is. Common complaints are that premiums always go up. Insurers are looking at ways to get out of paying. So why have insurance? Well, as insurance professionals, we of course like to try and balance those comments with, you have to have it, perhaps, and you could be in a terrible state without it, particularly following a large loss like a fire or flood. But there is still the mindset of, it will never happen to me. This year, we've heard that increases in service charge have been substantial, with a large portion of that service charge budget being allocated to pay insurance premiums. In the words of a managing agent, insurers now embrace a much stricter attitude towards risk and pricing across the market. Nonetheless, I suspect this is often ignored when people look at the cost report provided by managing agents. It's therefore important to consider the factors at play at the moment, and as best as possible, be equipped to remind people of why correct insurance is not just important, but critical. So what did we find in 2022? Well, we'll soon be publishing our annual findings, but ultimately, as you can see here, a huge amount of underinsurance with some major increases. This is statistics for all of BCH's surveys, but it's important to say that these numbers are not uncommon. And just let those numbers sink in there. Of all the surveys conducted by BCH where we were provided a declared value prior to the assessment, we found 75% of them to have some degree of underinsurance. And the average increase on those, 50%. Now that's the average increase. There were some that were far more extreme and obviously some that were less extreme, but that's a substantial increase. And as I alluded to there, these aren't necessarily inflated in 2022. They always are around these numbers, but it's certainly very, very common. To balance the argument, at 25% of the time we found overinsurance, and there was an average decrease in those instances of 14%. Ultimately leading to cumulative changes, as you can see there, which is substantial in a year. Over to the right, we can see underinsurance specifically in flats, which I'll talk a bit further about now. So of all of our surveys conducted for flats, as you can see here, we found underinsurance in 55% of the occasions. Now, as you can see, in 2022, that's actually lower than the statistics provided across our general surveys. But there's no doubt that it's still the majority of surveys conducted, and an average increase of 29% is still significant. Ultimately, either the flat statistics or the general statistics are shocking, but these leave leaseholders at serious risk of an issue in the event of a claim. And in our discussion with policyholders, managing agents, brokers, and insurers, we often hear about why properties might be underinsured. It could be the origin of the declared value was unknown, not a particularly good grounding to base your declared value. One very common one is additional structures not being considered. That could be structures, river walls, perhaps, in city or town centre locations. We often hear about basements being missed, external or communal grounds and shared structures being left out. And of course, the number was inaccurate to begin with, and moreover, was then index linked ever since. But in the last few years, one common reason that we've heard is that they've got an out-of-date RCA. It's always been a problem, but in particular with construction cost inflation the way it has been, properties have drifted more easily into underinsurance when they haven't had a proper RCA program or annual review. And that's certainly a high risk at this moment in time. So what about overinsurance then? Well, as you can see here in 2022, the balance is that 45% of the flats appraised by BCH were actually found to be overinsured. And of those, there was an average decrease of 12%. Now, interestingly, it's our flat surveys that see the highest degree of overinsurance. And often this seems to be attributed to reinstatement sums being set at market value, previously measured incorrectly, and associated structures assumed to be included when perhaps they shouldn't be. So you've heard me there say that structures are often missed, but sometimes structures are often included as well. And it's flats that seems to suffer, or has in 2022, with a larger proportion of overinsurance. Now, I'm well aware that there were periods when underinsurance was overlooked, within reasonable tolerances at least, and claims were paid in the interests of customer services where there was scope to reduce the payout. This wiggle room was due to the underinsurance clauses which were and are still written into policies, often called average clauses, and they simply state that a policyholder will be proportionately liable for any losses not supported by the value stated in the policy. So one of the key questions here today, impact to the lessee and the managing agent of under or over insurance. At the time that we're in at the moment, insurers seem to be looking for ways to save money and balance the books. And everybody knows, as we've demonstrated here, that underinsurance is rife. So I dare say, what better way than to look closely at the time of loss at the insurance values submitted. A tougher stance is being taken by insurers on underinsurance, which is generally only discovered when a claim is made. Loss adjusters and brokers have reported that cases of application of average are increasing. And here at BCH ourselves, we've seen a major increase in requests by insurers, by third parties, to check the adequacy of insurance values post-loss and to assist them in consideration of the claims. We're also being asked frequently by policyholders to challenge the values being used by insurers to reduce claims after a loss. Sadly, this is often a desperate attempt to reduce the impact of underinsurance, and unfortunately, it rarely helps. Now, should the values submitted to the insurer be found to be lacking at the time of the claim, there can be consequences, as I've said there. These are laid out in the insurance contracts, and the value of their claim is likely to be affected. What will follow is, at best, disappointment, and in the worst case scenario, leaseholders and business owners could be looking at financial ruin. Remember, it's not until the time of a loss that the adequacy at the time of proposal is verified by the insurer or their loss adjuster. If it is considered that the figure is inadequate, for example, a block that should have been insured for 4 million and was only insured by 2 million, the claim may be reduced by 50%. That rule applies to potentially any claim made, but it will be particularly catastrophic in a large loss situation. And although perhaps a little bit less disastrous, the negative of overinsurance could, of course, be that the parties responsible for setting the insurance may face challenges or potentially even claims from the leaseholders. In some cases, this could escalate. It could be as simple as a recovery of overpayment paid, or it could be that they challenge your management of the block that they're in. In either situation, the results are not good for those involved. So, what should or could be done to make sure that those responsible for setting the insurance value of blocks in the flats market can get accurate valuations? Well, in simple terms, most leases legally bind the parties to ensuring a policy is in place with a reputable insurer and that the value insured is adequate to enable the building to be reinstated after a loss for the benefit of all who have an interest. The responsibility might be with the freeholder or leaseholder. It often involves a property management company. Most insurance policies require the policyholder to state the correct value for rebuilding at the time of the proposal, and this should be reviewed at every renewal to ensure continued adequacy. The best solution then for those responsible is an RICS, Royal Institution of Chartered Surveyors, fully compliant reinstatement cost assessment, or RCA for short. An RICS compliant RCA values a building to be replaced on a like-for-like basis. It follows the strict guidance of the RICS, and fundamentally it involves a site-based survey. Purpose of this is to gather information about the property, measurements, photographs, the surrounding areas, so that when you return to the desk, the information can be collated and enable a bespoke insurance valuation related to that property and the particular elements of the block and the site, leading to a succinct report giving a valuation. It's important to consider that reinstatement cost assessment is not just the cost to rebuild the block itself. It needs to include the cost of demolitions, site clearance, and professional fees that could be incurred, and also the external works. And in some cases, that can be substantial car parking, landscaping, other structures. And as I alluded to earlier, these parts are often overlooked and in some cases can have a very significant impact and contribute a very large part of the valuation. On receipt of the RCA, it goes without saying that the value provided should be given to the insurance professionals to ensure they put suitable cover in place. From a compliance and policy perspective, RCAs should always be conducted to meet the requirement of the policy and obligations on the party responsible for insuring the property. But for all the reasons I've listed earlier, if there was ever a time to undertake an RCA, it's now. It should have always been the case. But at this moment in time, with the meeting of two major industry events, it's a really good time to make sure that that assessment is up to date and that the value is correct. And don't just assume that if you've undertaken one recently, you can simply put it on a shelf and forget about it. Sorry. It's never been more important to regularly review the sums insured. The RICS recommend that once an RCA is carried out and a building sum insured is set, in addition to undertaking an annual review with your insurance professionals, that'll often involve indexation. Guidance dictates that this figure should be subject to a major review at the 3-year anniversary after the initial RCA. And the policy wordings may well align with that as well. At a minimum, at the annual review, the responsible party should consider what might have happened to the rebuild costs since your RCA with your insurance professional. In addition to this, at the 3-year anniversary, a major review should be conducted. In some cases, it's the preference of the managing agent, the insured, the insurer, or any insurance professional for another site-based RCA to be undertaken. And indeed, that would be very robust practice. But provided there have been no significant material changes to the development, where BCH have conducted the original assessment, we're able to review all of the information collated from our initial site visit, measured areas, building pathology, influencing site factors, have a discussion with a nominated party for the site, and use our live market data to recalculate the sum insured. And as this can be done remotely and doesn't require a visit to the site, we're able to issue these major reviews promptly providing a high value RICS compliant product at a low cost solution to the customers. Needless to say, a major review on a single BCH RCA report is charged at a fraction of the cost of the survey. And when used properly in a life cycle, it can reduce the cost impact of the surveys, even if not the cost impact of the premiums to the leaseholders. So, more than ever, as I alluded to earlier, the current economic situation emphasises the importance of regularity of review and the life cycle of an RCA. We've seen indexation in the high 20s at times, hovering around 10–12% at this moment in time. And although there is some talk of those percentages reducing, there isn't a huge amount of talk, with the exception perhaps of material prices, of any form of deflation. So, as I alluded to earlier, at times like this, even for people that are prudent with their RCA program, it's easy to get left behind and become underinsured. Now, again, balancing that point, if in a year's time, maybe a couple of years' time, markets settle, large indexation applied during 2021 and 2022 could potentially lead to some instances of overinsurance and a reduction to DVs. But that would only be in a time if there was significant building cost deflation. It could, of course, work both ways, and the regularity of review would ensure that the policyholder remains aligned to what's happening across the markets in a constantly changing world after years of fairly static and a predictable level of cost inflation and the insurance market. So in diagram form here, what we can see on the left-hand side is the site-based reinstatement cost assessment. And this diagram depicts a sensible program to the RCA lifecycle. So a site-based reinstatement cost assessment on the block of flats, at which point a surveyor attends the property, as I alluded to earlier. 3 years later, and in between times, an annual update with your insurance professional. 3 years later, a major review, aligning with RICS guidance. 3 years later, a revisit. And in BCH's case, that would be at a discounted fee to the original site-based survey. Again, important consistently to be providing that annual update throughout the life cycle policy at the annual review. And doing so on a program like this would ensure that your building sum insured remains accurate, keeps up with current market trends, and stays RICS compliant. And a cycle like this could continue into perpetuity. Now, I'm conscious that we've wrapped up very quickly, more quickly than perhaps I thought we would, but I was trying not to cover death by PowerPoint, given we've had it such for the last few years. And I've tried to deliver here with a positive outlook and avoid a topic which perhaps can often appear as scaremongering. It is a scary subject, and it should be a scary subject given the degree of underinsurance. But our goal here is to provide a pragmatic solution to assessments and to help protect yourselves and leaseholders. As I've said throughout this talk, we are still in unusual times, and the best thing to do in such times is just to keep on top of those numbers, keep on top of that regular review. And here at BCH, we're here to help. So thank you for your time. I'm pleased that I'll give you a bit of time back, but are there any questions that you would like to ask at this point? Okay, so I've got a couple of questions here. The first, well, seemingly actually a lot of the top three relating to VAT, as it would seem. VAT, you will have heard us talk about quite a lot over many, many years. Fundamentally, the sort of best piece of advice I can give is to check with a VAT professional. We are, however, seeing lots of movement to include VAT on everything, but it could well be possible that VAT is only required on the demolitions and professional fees and not on the rebuild, as it's a residential property. So is it best to have VAT or no VAT? What I would say to that, Christine, is definitely double check with the VAT advisor on that subject. And to answer the question as to whether we allow VAT or not, we provide figures both exclusive of VAT and inclusive of VAT, and also a breakdown the different elements of the valuation, such that you can add VAT to areas if you needed to. Let me just see the other questions here. Beth, yes, I believe both the slides will be shared and the video as well. Question here, why are desktops rising in popularity if desktops are far more likely to miss parts of the building, like basements, for instance? And would BCH do a desktop assessment for a client if it hasn't actually visited, say 3 years or earlier? So desktops are rising in popularity because of a market demand for them. There is lots of pressure in the market at the moment from insurers or brokers to have a cheaper service, and one that is perhaps able to be turned around more quickly and less intrusive. I think probably part of the pandemic has assisted in that rise. Are they more likely to miss basements? I mean, fundamentally, it can be quite tricky to establish that a basement exists in a property. At BCH here, we would always ask questions around things like basements or mezzanine structures that might not necessarily be obvious. And any desktop that's undertaken should be underpinned with a degree of background research to establish as much as possible about the building. As we would always say, and the same applies to our major reviews, if you have any degree of uncertainty, ask the question. Somebody will know if there's a basement present, the finish of that basement, the size of that basement perhaps, and it's good then to ask that question. Do BCH conduct a desktop assessment for a client if it hasn't actually visited? We do have a service called Benchmark. We've spoken about that in various press articles, and it is a service that's rising in popularity. I should say that a desktop assessment that hasn't been visited before doesn't comply with the RICS guidance note on reinstatement cost assessments. But that doesn't necessarily mean it doesn't have a place, but it's just important to understand that and make sure you're discussing that with the insurance professionals at the time. Just see a few more questions popping up here. Why don't insurers and brokers make more effort to check the adequacy of insured values when the policy is taken out rather than just when there is a claim? It's a great question. I think there's a lot more awareness of insurers and brokers, particularly in the last couple of years as well, to raise this subject and be discussing it with their clients, perhaps again more than ever before. I think the reality is, whilst they may have a lot of data to substantiate this, certainly the insurers, it isn't actually their place necessarily to comment. It's the responsibility of the person or the individual taking out the insurance. And I suppose, as with anything, unless you can confidently give an answer, and it's what you do, to some degree, it's probably best that they don't comment. So I think, yes, it is looked at, obviously, when there is a claim for obvious reason, and has to be, but the responsibility does sit with the individuals taking out the insurance on the property. And seemingly, insurers and brokers are doing more at the moment to support that than perhaps in previous years. Just reading a few more questions, bear with me here. So a question here, we've recently had our major 3-year reviews at the at the majority of developments, which has resulted in DV increases of 50% or more. Is this what is happening in the current climate due to cost increases, or is it down to underinsurance in the previous RCAs, or potentially both? I suppose it's tricky to say without knowing the exact detail behind those surveys. What we do know is that there has been substantial increases in materials, labour, everything really related to construction in the last few years. 50% is a relatively big number. We've not seen individual annual indexation up at that level, but certainly over a period of time, it's been substantial. I would imagine that there might be some specifics related to the site perhaps that have changed, but to answer that, I'd need to know a little bit more about the site itself. Question here, where there is a large estate, is it best to have a separate RCA done purely for that rather than tag onto the blocks and car parks? One has many play areas, artwork, structures. It could be. It depends on the way you've got your insurance set up and who's responsible for it. If it's shared amongst all the leaseholders and perhaps multiple blocks, then it really depends on the policy itself. It is possible, obviously, to separate out parts of an assessment, provide a separate estate cost to perhaps the buildings and immediate associated structures. So it can be done, and it just depends on how you want to insure the property, which is something to check with the insurance professionals. Question about measurement standards. So yes, the international measurement standard as of 2018 by the RICS is applied to BCH surveys and should be, generally speaking, across the market. A question about what are your costs? Depends on the individual block, obviously. So we provide a cost for flats on a unit basis. There is a scale depending on the number of units, and that will be provided on an individual basis. Anyone could contact a member of our team and get a quotation for it. Sorry, a few more questions coming through here. So on desktop assessments, there are concerns that these resulted in inflated DVs to cover the backs of the assessors who aren't seeing the building in the flesh. A provider I spoke to recently said desktop assessments can inflate declared value by around 20%, which makes instructing a desktop a false economy. Do I agree is the question? No, I wouldn't agree. There is obviously a degree of, I suppose, contingency built into a desktop assessment. There has to be. And it is not going to be as accurate as a site-based reinstatement cost assessment, where a surveyor has literally measured the property, seen the inside and outside of the property, and been able to gather all the information available. So an RCA is still the best way to assess a building and will give the most accurate result. A desktop is likely to have a degree of contingency, but certainly here at BCH, we when we do a desktop, we're looking at multiple sources of information to ensure that there isn't any inflation that's unnecessary, despite not seeing the property. Could I give a flavour of how surveyors go about their valuation? Yeah, absolutely. So a surveyor will obviously agree with a suitable contact, a time to attend the property, and what access is required. Time on site, of course, depends on the size of the property, the access arrangements, and things like the external factors that might be present. Realistically, they're going to need to measure the outside of the property, both around the perimeters and the heights of the structure, go into the properties, get good access there as well. So time on the site will vary on the size, but it's important that before they leave, they've gathered all the information available to them. Reference here to using BCIS scale. or a per square foot basis versus number of units in a block? Well, at BCH, we don't exclusively use BCIS scale. We pull multiple sources of information together and actually do our assessments on an elemental basis as well. Number of units in a block is a really important consideration, and it can actually change the cost quite substantially. One building with a couple of apartments or flats, a same size building with 4 apartments can impact the cost. So it's important to know the size of the building, the number of units in that building, and of course the finishes in all of those flats as well. So it's a balance of various different factors to calculate the RCA. Could be, yeah. Question here: do you or can you apportion to any individual flat, or should it always be presented as a block? Generally, we will present as a block. There is, of course, different methods of insuring, particularly in Scotland with individual flats. For a site-based RCA, it is possible for us to provide splits. Generally speaking, we don't go into individual flats and present findings as a block. You would always have to value the whole block to establish any individual splits out of a property in any case. And a question about level of uplift being applied this year. Well, we monitor uplifts throughout the year consistently, as I alluded to there. We pull through many different sources of information when looking at cost inflation, but also our costs generally. So there isn't a one-size-fits-all answer to that, I'm afraid. We monitor at regular intervals throughout the year to ensure that we keep up to date with changing costs. I think, unless there's any more coming through, they seem to have stopped at this point. So hopefully we've answered most.
Yeah, I think we're through them all. Sorry, excuse me. Thanks, Mark. Hope everyone found that useful. Definitely, I've learned a few things while I've been sitting here listening. If anyone would like to join us on our next webinar, which is on Thursday this week, that's going to be with Annie McGrandles from PMR, and she is going to be discussing how do you achieve MRICS in block management. If you want to register for that, then please visit the News on the Block website. Otherwise, thank you, Mark, for your time today. That's been fantastic, and thank you everyone for joining us.
No problem at all. Thanks, Vicky.
All right.
Thanks, everyone.
Thanks, Mark. Have a good day.
And you.
Bye.